Welcome to Behavior and Risk, where we explore the intersection of decisions, the brain, uncertainty, and the business world. I'm John Burkhart.
And I'm Rich Loria.
We're glad you took a chance on us today. January 27th, 2025 was an interesting morning for Rich and I. We have a weekly check-in with our research team every Monday at 11:30 a.m. We had concluded discussing some topics that had been under development, and Rich and I asked our team if they had any suggestions for future topics. Our team said, "Well, what about DeepSeek?" And Rich and I said, "What's that?" Both of the women on our research team are Chinese, so they have some familiarity with DeepSeek and the R1 chatbot. And as they explained what had happened over the preceding weekend, and Rich and I frantically Googled and tracked market movement and watched a truly epic market crash unfold in real time, our risk management eyes lit up. We didn't know exactly what was going on, and you can make a case that no one still fully knows what's happening here, but we knew immediately that this was something that had to be assessed through a risk and behavior lens. The major Western AI powers were fat and happy in their positions. They had broad popularity, and their chatbots were the unquestioned kings for lay users. And today, all of that is in peril, as they collectively failed to see or possibly take seriously the development and emergence of a competitor who could offer everything that they do at a fraction of the price. Simultaneously, there are what appear to be significant opportunities on the horizon resulting from the emergence of DeepSeek. And while opportunities are good, we don't want to repeat the same risk identification mistakes that all of the West seemed to make the first time around. So what's the story here? The short version is that in December of 2023, DeepSeek was founded by a Chinese hedge fund manager named Yang Wenfeng. DeepSeek sought to develop AI capabilities domestically within China, which meant that it had to do so without premium AI chips from NVIDIA, which were and still are under import restrictions from the United States. Consequently, they focused their efforts on improving efficiency and developing novel training approaches with lower-tier hardware. In November of 2024, they released a demonstration version of their R1 chatbot, and on January 20th, 2025, the chatbot was made publicly and freely available on both the Google and Apple app stores. Over the weekend of the 25th and 26th, R1 became the most downloaded free app on the Apple Store, and seeing this and seeing DeepSeek's claim that total development costs were a paltry $5.6 million, on Monday the 27th, the finance and tech sectors panicked. NVIDIA alone dropped 18% in one day, resulting in more than $500 billion loss in market cap. Yes, you did hear that correctly, $500 billion. And today, it's only about 2.5 weeks out from that as we are recording this, so the dust is still very much settling. Journalists are still writing, and financial managers are still adjusting their long-term forecasts. We are a long way from fully understanding the complete consequences, but we can definitely start looking at how did the markets and the major players in the AI space miss this one so completely? And what lessons can we learn from this to avoid making the same sort of mistake within our own practices? Rich, based on what we know today, on, as I said, February 13th, 2025, I see this as a story primarily of failed risk identification and the processes that serve that. Would you agree with that, or do you see this in a different way?
I largely agree with you, John. I think in terms of the investor community, in terms of the management of these AI firms and those associated, the vendors to these AI firms, I believe missed it. And I believe there were a number of behavioral issues that we've talked about in other spaces, in other competitive industry evolutions that have come to bear here. So this is a great live test tube of many of the ideas that we've talked about previously in different venues.
I agree with that entirely. As I was watching this, I say watching this again, this is very short notice. As I have been observing this as it unfolds and trying to postmortem something that probably is still in the throes of dying, there are a few things that really just jumped out at me in terms of how could companies have gotten this so wrong? Companies that really make their entire value proposition on complex analysis and future forecasting. Both of those failed spectacularly here. One of the big things that I see is a big failure in representativeness. This is a heuristic that people use to do processes of categorization rather than actually calculate what is going on. You compare your target, your item of consideration, to a mental representation you have of what something is supposed to look like. We all know what a successful AI company is supposed to look like. It's supposed to look like OpenAI. It's supposed to look like Google. It's supposed to have funding like NVIDIA. DeepSeek is not this. DeepSeek did not look like a major successful AI company. While there are a number of other elements that subserve the failure here, I think this probably is the biggest one, is that this just did not look like a legitimate competitor in the AI space.
I agree with that assessment, John. Given the location, staffing, and available resources of DeepSeek, and you've already touched on the semiconductor import limitations for Chinese firms, it likely did not look like a competitive threat. It is also interesting to note the history and the staffing of DeepSeek itself, which ironically, and there are many ironies involved in this whole story, in my humble opinion, but DeepSeek was developed by a hedge fund manager based in China and its staff with many young recent graduates from Chinese universities, and very much has a structure that is very level, not hierarchical. So they took a page out of Silicon Valley's playbook and created an infrastructure where ideas could be shared and acted upon very quickly without a lot of bureaucracy.
In many ways, they seem to have out-startuped the startup area. I think that they took that playbook from really 20, 25 years ago out of Silicon Valley and made it work very much in their favor in a way that we haven't really seen. Because again, when you look at the time frame on this, they weren't even established until December of 2023. This is a radically quick time from inception to first product deployment.
Yes, John, there was no way that DeepSeek was on the radar. And when I say not on the radar, it doesn't mean that the open AIs and the Microsofts and the others of the world, the other established players in the world, were not aware of DeepSeek, but that they weren't being seriously considered a threat, which is often the issue when you have disruption. And the reason I use the word disruption is because of the market's reaction to DeepSeek's introduction. So it's one thing if DeepSeek had made their announcement and things just went about their way. But the fact that the market reacted so harshly to it and punished the stocks of pretty much anybody associated with AI, even on a secondary, tertiary, or even more remote basis, speaks volumes of how the entire community built around AI and technology was blindsided, and largely blindsided by the fact that this did not represent a serious competitor to the established status quo.
I'm going to throw a cautious caveat around that because I think that the market response maybe doesn't mean exactly what most people think it does, or maybe it should be interpreted slightly differently. I know we want to talk about lessons for investors later on here, and I don't want to skew too far afield from that. But I'll just put a pin in it for now and say that I'm not sure that the response in the market was as rationally based as it should be. Of course, we know that very few market responses are rational, but I don't think it was necessarily a function of DeepSeek itself. I think it was a function of DeepSeek's competitive position, and I'll get to what I mean by that when we start talking about the investor space. But to your previous point around whether or not the big players saw this coming, whether or not NVIDIA, OpenAI, Microsoft, what have you, whether or not DeepSeek was on their radar, I think this comes to a really important point where if we're looking at another heuristic, I think information availability is a very big factor here. Simply put, speaking very broadly, China is not the most transparent environment and market in the world. Whether this is good or bad is really not an item of discussion here today. This is a statement of fact. Compared to the US market, China is far more opaque. There's a genuine question as to how much information about DeepSeek, about where they were in their development, about their resources and capital, did the US players have access to? Was this genuinely something that they knew about? We also see problems of availability in terms of the US players are all surrounded by US AI companies. And when I say US, I'm really speaking about Western markets, but by and large, that means US for the moment. That may be changing in the future, probably is, but right now we're largely talking about US based AI companies. They're surrounded by other United States AI companies, and this creates an increase in the salience. This creates a sense that these are the competitors. These are the people I need to worry about because I hear about them more. I see them more. The US companies see these other US companies every day. They know that this is the competitive landscape, and this creates the sense that these are the people who I need to worry about most. There's greater salience of the activities of these other organizations. Layer that on top of a lack of information or perhaps spotty information about DeepSeek, and there's a very human tendency and a very unavoidable, in some ways, human tendency to simply not take DeepSeek seriously.
That's very interesting, John, because another irony, and I'm going to use irony probably a couple more times in this podcast. The irony that I want to point out with regards to what you've just stated is that when ChatGPT burst on the scene a couple of years ago, that was clearly a disruptor and a game changer and made AI something that everybody suddenly was talking about. I know because in the classroom, we were talking about, do we let students use AI? We've got this thing that's just been thrust upon us. What do we do about it? In the workplace, should we use AI? How do we use AI? How can it be used to make our processes better, particularly in companies that thrive and find their profitability from leveraging information or information asymmetry? So the irony of all this, and again, I'm not sure what companies could have done necessarily different, is that after an event that happened not very long ago that put AI on the map, so to speak, really put it on the map, it went beyond just being something that had a certain discussion academically to now something that had commercial viability. It is interesting that an industry that is still very, very young, its main players were already pigeonholed into thinking that their competitors were this limited group of Western players.
Well, I think that the youth of the space exacerbates that because there isn't a data sequence prior to that. There's no history of it. And so coming back to that issue of availability, the last 2, 3 years really is all that we have for our baseline of what does AI look like? Who are the players? What is the competitive landscape? So the availability to date up until, January 27th really was just these US based companies.
Well, I would take issue with that,
Okay.
not because it's inaccurate with regards to the AI space. Everything you've just said with regards to AI is absolutely on point. However, this century alone has taught us that disruption is happening all the time. I live in New York City. I've been taking New York City yellow cabs my entire life. I now regularly use Uber. If you had asked me, 15, 20 years ago, would I ever imagine a day living in New York City when I wouldn't use a yellow cab? I would have said, you're crazy. But along came Uber and they turned the whole transportation model upside down. So this disrupt, and that's just one example. There are multiple examples of this with regards to the technology and how each new iteration of technology offers more and more opportunities to disrupt. So that's where I take a little bit of issue. And again, this is something of a warning for all risk managers out there that disruption is now a part of the fabric. So if you are a risk manager at a major firm, particularly one that is heavily dependent on innovation or is continually driven by changes in technology and business models, then you have to factor into your risk scenarios the potential for disruption. Now, having said that, and I want to make one final point before I let you respond, John, defining these scenarios can be very difficult. And I'm not going to say that, I'm not going to use hindsight bias here to say that all of the major players in the AI space should have seen DeepSeek coming. That's not what I'm saying at all. But the potential for a disruptor to come along is definitely there. And even some of the experts who have now weighed in on DeepSeek said, yes, there could be another DeepSeek a month from now.
I think this comes to a really interesting question about the nature of this particular event and disruptive events in general. As you said, disruptive events seem to be now baked into the fabric of all modern business practice. Knowing that, however, and being able to prepare for it, I think are very different things, because we look at what we would call failures of imaginability. These kinds of disruptive events are very difficult to plan for because by their very nature, they're not things that we have encountered before. They're not things that we have seen, and therefore humans, as a general rule, don't do great at thinking of things that are truly completely novel. If we come to Nassim Taleb's definition of black swans, I have thoughts about it, but one of his characteristics of black swans is that they are predictable in hindsight. When looking back, it's easy to construct a narrative of, well, this was obviously going to happen, but this is not true in the converse. When you are sitting in the present and looking forward in time, it's not true that you can easily see them coming. To your point, Uber, in retrospect, is a very obvious innovation. That how could taxi companies not have seen this coming? Well, because we're sitting currently in 2025, and a lot of people forget what it was like in 1998 when reliable mobile phone service and smartphones really just didn't exist. Likewise, I think that with DeepSeek, it's very easy to say, well, yeah, of course, you have an entire country. We're conflating China with DeepSeek here, but DeepSeek was a major player in China, which has an enormous population and a singular will among the government to keep up with Western powers. Of course, they were going to find a way to pull even or even surpass the West in the AI space. Now, this is obvious in retrospect, but think of you and I back on the 27th. We had no idea what was going on. This was not even remotely on our radar. And I think that there's a wisdom we have to pull from Donald Rumsfeld on this, where he talked about there are known unknowns and there are unknown unknowns. And I think most genuine disruption falls into those unknown unknowns. As a risk manager, I think you need to be aware that they are out there. But other than having flexibility and a will within an organization to pivot when necessary, I'm not sure how much specific planning you can really do for these.
That's a great point, John. It's easy in hindsight to say, you should have been aware of this because look what happened. It happened. So there's the story. And we can piece together the story as it occurred, or at least with the facts that we know. And one thing, again, we want to caution our listeners to is that this is a story that is still evolving. It's a story that is still being written as we speak. So we know at our own peril that some of the things we say today, we may have some very different views on in even 3 to 6 months from now. Nevertheless, John, your point is a good one in that you can't always think of every possibility that can happen. But what risk managers can do is to have processes in place that can be adapted, that can be adjusted as these disruptive type events occur. And so I think what we're going to find out in the coming weeks is, how does OpenAI and Microsoft deal with this?
Yeah, I think that's going to be a really interesting thing to observe going forward. An additional caveat I want to present to our listeners is that we have no inside knowledge. We are not speaking on behalf of OpenAI or Microsoft or NVIDIA. We have no idea what the internal conversations are at these organizations. Rich and I have commented to ourselves more than once that, wow, it would be really great to be a fly on the wall at any of those companies on the 27th just to hear what was going on. But we don't know any of these. So it may be as things move forward and documents and memos are released, we get further clarity, or things that we say now are contradicted. But to your point around how are they going to respond, one of the things that I'm curious to observe, we've talked a lot in the past in different episodes about overconfidence. We know from decades of behavioral research that overconfidence is ubiquitous throughout all human decision making. We're basically wired to assume that we are better at things than we really are, and that things will work out better for us than they actually will. I think that definitely contributed to the positions and lack of concern that these major players had for disruption. But I think there's an additional factor that amplifies or exacerbates this and will likely persist going forward in a way that overconfidence may not. And this is endowment. Basically, these organizations have been throwing money at development of their AI platforms and their chatbots, billions of dollars each for multiple years now. With that level of expenditure, these US players have to believe that they're the top of the heap. They must believe that, because otherwise, what are they spending that money for? I wonder to what extent we're going to see rationalization and narratives about skepticism around some of the numbers coming out of DeepSeek, and are they actually performing as well as they genuinely are? We know at this point, OpenAI is already accusing DeepSeek of using the ChatGPT outputs to help train its own data. Whether or not that's true, who knows? I doubt we'll ever have full clarity on that. But I think this endowment, this sense that we've put this much effort and money into it, therefore we are worth a certain amount. We are worth a certain level of value and attention and merit. I don't know how you get around that, or at least not without a lot of pressure in the opposite direction.
Yes, I agree with that. And I don't have much to add on the overconfidence side of it, but clearly there has to be a certain amount of overconfidence, a certain amount of optimism that one can control the fate of an industry and be able to shape it. And as we learn time and time again, and as past case studies have taught us, we don't have as much control as we'd like to think. And the reason that we want to believe that we're in control is because our brains don't like uncertainty. And that's one of the first things you taught me, John. And
Yep.
again, I want to reiterate that for our listeners. That drives a lot of our behavior. So the fact that these folks at these companies, these really, really smart people who have invested a lot of money and now are being questioned, they're going to look at it and say, look, this is what we knew at the time. There was no reason to believe that we weren't going to continue to corner the market. And frankly, in a lot of corners, they're saying we still have the better model. We still have the better mousetrap. We think over time that'll eventually be proved.
It's a position that might be true. I fully confess that I'm not an AI expert, and I have no particular way to evaluate either claims. And I think at this juncture, there's no way of knowing which claim is more accurate. But at this point, I think it's very clear that purely on investment alone, the traditional players have a vested interest in their model being superior, and they will do whatever they can to find results and interpret and construe the facts in such a way that bears that out. I think this is an important lesson and thing to point out for investors and anybody who is evaluating this space for technological or functional purposes. And I think there's a broad lesson here for looking at any sort of space, which is that sweat equity and regular equity really are no guarantees of success.
Yes, there's always uncertainty, even if you put your heart and soul into something. There's uncertainty as to the ultimate outcome and whether it'll be deemed successful or not. John, I'd like to take this in a little bit of a different direction and to, in particular, discuss what may have been going on with regards to DeepSeek. So, up until now, we've been talking about the risk failures, and could these risk failures have been avoided given the nature of human beings, given the nature of our brains, given that these series of events that have happened appear to be repeating certain things that have happened in the past. But I'd like to look at it from the potential of DeepSeek. And again, this is with very little knowledge and having certain interpretations of statements that have come from DeepSeek. I believe to some degree that DeepSeek leveraged optimism bias, which is really, really important in any type of innovation. There has to be a deep-seated belief that the status quo can be changed. There has to be a belief in a better mousetrap. And effectively, that's what it appears on the surface anyway, that DeepSeek has created a better mousetrap. The fact that DeepSeek appears to have created a learning model that cost a fraction of what the existing models out there cost, and that it actually does some things even better, like mathematical calculations, to me says they had to really believe in what they were doing, and they had to believe in a philosophy that was distinctly different than what is being used by the major players in the space, the established players in the space. So their whole model of bringing in recent graduate students, letting them share their ideas, using a limited number of NVIDIA chips. In fact, they supposedly use chips that are a couple of one or two or more generations ago. All of that indicates to me just a deep-rooted belief that there was a better way to do this. And the fact that they created this structure, and we've referred to it earlier in this podcast, tells me that they believe that there was a better way to do it. And at least here are the first indications. And if you go by the downloads of their app, if you go by the number of downloads, I mean, they're kicking the heck out of everybody else right now.
I think there are some really important questions that we need to ask, because what you just suggested, Rich, the leveraging of bias and the way that just observing how things have unfolded, they have very effectively leveraged consumer behavior towards a broader outcome. One of the things, and I hinted at this when we were talking about the markets, and I feel like this is a very appropriate point to bring it up, is that the timing of the market crash around the AI sector is very curious. The R1 demonstrator or proof of concept was released in November of 2024. It's been available through their own website ever since that time. And this R1 chatbot as a downloadable app was made available on January 20th, a week before the 27th. And if you look at NVIDIA's as a proxy for, the rest of the market and the tech sector, NVIDIA's stock price was stable through that week between the 20th and the 27th. It was not until that weekend when downloads of the R1 chatbot surpassed all other apps on the Apple Store when the market started to panic. And so it wasn't actually anything about DeepSeek itself that caused this market panic. It was the conversion of consumers away from the more traditional players that caused it. It would seem as though the tech sector or investors in the tech sector were really unconcerned around the capabilities of DeepSeek. They were far more concerned about the ability of DeepSeek to draw consumers away. Now, it's also worth pointing out, I think, that yes, NVIDIA did suffer an epic collapse in share value, 18% in one day, fell from 146.62 to 118.42 from open to close on that trading day. But as of right now, on February 13th, midday, markets haven't closed yet, but NVIDIA's back to trading around 135. So it's recovered most of what was lost. But all of this, I think, does speak to your point that DeepSeek has very effectively grabbed user share, let's call it. Market share is a very different question, but user share is being very effectively grabbed. And I think this begs some questioning of certain things they've put forward. Have certain pieces of data, certain narratives they've put forward been presented purely to grab the attention of users and not of investors? They famously have announced that They spent $5.6 million in total development cost for this model. Now, I don't claim that I have any inside knowledge here. I don't. We know that China is famously opaque for business proceedings and that reporting requirements over there are very different than reporting requirements in the States. And generally accepted accounting practices are different in China than they are in the States. 5.6 million is a very questionable number just because I did a bit of research comparison here. If we look at Linux, which is another famous open source software platform, it's estimated that just developing the Linux kernel would cost about $1.8 billion. And that's not a complex AI engine. That's a data management system. I also think it's very interesting that DeepSeek and the R1 are open sourced, that they have just cheerfully said, here's all the back end users and developers, please do with as you will. Now, this open source narrative is curious, I think, because by most software standards for open source, it's not. What they have done is they have made what they call the weights, the data weights public. They have not made public any of the training sets. And so you don't know how they arrived at any of these weights. Within the software development community, this would not be considered open source. Nevertheless, they have declared it to be open sourced. So this is a very compelling narrative. It's subversive in counterculture. And it's also, I think, questionable because if you look historically, open source is tricky to monetize. There are a number of companies, of software companies that have gone open source, and they've historically had a lot of trouble turning a profit. They very effectively drive user acquisition, but they don't so much drive a profit, which leads us to question, or at least leads me to question, what is the end purpose of DeepSeek here? Are they really trying to move the market and develop a market position, or are they trying to gather as many users as possible? And if that's the end goal, what is the purpose that underlies that?
Those are all great questions, John, and there's a lot of directions we can go with it. It's pretty clear that the $5.6 million estimate is an understatement. Industry experts have said they believe that the actual cost of DeepSeek R1 is as much as 1.6 billion, and that the company has about 50,000 NVIDIA chips in it. So this begs the question, what does the 5.6 million represent? And from a number of sources, it appears to represent the cost of the final training run, which ignores a whole lot of other training that was going on and development and infrastructure costs before that. So then the question becomes, why not just talk about the total number? If it's 1.6 billion, whatever. And I believe this goes into another bias that they are leveraging. And we can get to why maybe they are, maybe tie this back to your point about what's their end game here. But it's clear that they're trying to sell a narrative. And part of that narrative is being the low cost. And by putting out such a low number and being opaque about what's involved in that number, they know that there will be skeptics, and particularly with the established players or those connected to established players, and that there will be attempts to adjust that number upwards. However, we know from our work in the cognitive bias space, as Kahneman and Tversky have shown us, even experts will have difficulty making a proper adjustment, especially given the lack of information on DeepSeek and its operations. We won't know the full cost. And even experts have come about to say that what DeepSeek has done, regardless of whether you buy the 5.6 million number or not, which you probably shouldn't, they've still done something remarkable. And at a fraction of the cost, albeit probably a larger fraction than they're saying.
I think that is a really important point. They are relying on everybody first hearing that number and anchoring on that. And to your point, I think it's correct that experts are going to have difficulty appropriately adjusting from that anchor. But to the previous issue of what are they attempting to do, if we do assert, or if we do assume that capturing user base is their primary concern, They don't even need to worry about adjustment because the average lay user may be vaguely aware that these numbers are questionable, but they're never going to update. They are relying on this as a low end anchor that people will hear and use as sort of a data point for how innovative and how forward thinking this company is. I should use them. And once they've established that behavior, it really doesn't matter if the number gets adjusted upward because the lay users will already have generated the habit around utilizing DeepSeek.
Right. There's a new pattern that is set in. Inertia will set in
Yep.
terms of user behaviors, and they will associate the brand of DeepSeek with deeply efficient AI generation with similar power and capabilities to established players that are far more inefficient. I also think there's another aspect to this. So I think you're right on that part of this is attracting users. I also think there's the possibility, and again, only time will tell, is that this is a way of attracting investment by
Hmm.
showing that they can create a better mousetrap at a fraction of the cost. And by setting that number, putting that number out there at such a low number, it's saying, come invest in us. We don't even need that much money. Just come. You can just put a few RMB with us. Doesn't matter. We're here. It's speculative on my part, but it certainly would fit in with the overall messaging strategy around this, because why make a specific effort to point out how little this costs? And by the way, I do think that number did spook investors as well as the users moving away. Now, I think it's everything in combination, but I think those things together that got investors concerned.
It will be curious to see what kind of monetization strategy they pursue in the future. Without having some sense of their direction there, it's really difficult to interpret more deeply because there are so many different ways this could go. I can see that. And depending on who their user demographic swings towards, we know that just broadly across all spaces, Gen Z and Gen Alpha have a greater tendency to digital tip through things like Kofi and Patreon and these sorts of platforms where
Mm.
providing users or services that they value just a little bit of a kickback here and there. If that is the demographic they're pursuing and they see this as a long term play, this could open them up to monetization through crowdsourcing, basically. The other thing that I think we need to ask ourselves and be aware of as a possibility is a sort of combination of multiple factors here. We've talked about how it seems very clear that they are hyper focused on attracting user base. It's interesting on top of that that this app is free. At present, the app costs nothing for downloading and using through the app, both Apple and Android stores. There's an old adage that if you're not sure what the product is, you are. This is the other direction I think we need to be very aware of, and as users, have some level of risk assessment going on over. Because if we are the product, we know, for example, that Google monetizes digital search, it monetizes email platforms. That's their entire revenue platform, that's their entire revenue model. Is that the revenue model that DeepSeek is going to pursue? If so, then having, half a billion users deploying it is a very, very powerful tool, both in terms of ability to sell ads and sell lists and to train and feed their own data models. I think we need to be aware that if you're using DeepSeek, you are very likely being sold in some capacity. Whether or not you're comfortable with this is your own decision, of course, but you should not have any illusions that this is happening.
Yes, it's quite possible that collecting information for a variety of purposes that you've outlined is one of the key takeaways from this. I think information is key today. We're in the information age. Information is power. And being able to have something that gives you a monopoly or at least a significant cut of the information that's out there on people and what they do and what they value is incredibly valuable to a whole spectrum of different actors, whether here or over in China.
So, what can we take away from all of this? There are a ton of moving pieces here that have lots of different dimensions in terms of tech development, human behavior, market movements. What are the broad lessons that we should look at as risk managers, as consumers, as investors, as behavioral connoisseurs?
Well, the first one that comes to mind is do not underestimate the power of inertia and status quo bias. Inertia is arguably one of the most powerful behavioral forces in mankind. And there will be a tendency now to reestablish a new baseline of where things are going. Everybody has adjusted their models and now have a view, or I shouldn't say they've adjusted their models, but they're in the process of adjusting their models and are going to come up with a new straight line. This is where things are going, incorporating the reality of DeepSeek. It's important to be aware that there is a reasonable possibility that's going to change at some point in the foreseeable future. And it could change in a way that nobody can think of. So again, going back to your Donald Rumsfeld comment, which again is always, there's a lot of wisdom in that about we don't know what we don't know. And that's really where risk management has to become not about knowledge, but about preparation. And that investors just need to be aware of keeping their ear to the ground and looking at the entire chain of what's going on.
I think that even beyond that, this is a situation where I'm not sure we will ever get a trustable set of facts out of this. It's an inescapable truth that the United States and China are engaged in a, call it, proxy conflict, might be overselling it, but they have opposed interests. And both sides have a tendency to present facts and present narratives in such a way as maximally benefits their own positions. It will be important to keep in mind that there will be a huge level of propaganda attached to all of the facts, or what are labeled as facts, that come out around this from both the DeepSeek side and from the traditional player side. And as a risk manager, of course, we're dependent on good facts. We're dependent on solid, objective information. I'm not sure we'll ever be able to get truly reliable, objective information around this. And so I think the broader meta lesson here is be aware that your models will fail. Your models are going to be incorrect, and you need to have an ability to be flexible or have enough mitigation in it to account for that.
And when we talk about mitigation, it's not necessarily mitigation in terms of buying protective puts per se, but in establishing real diversification. So one of the risks that you need to be mindful of is in terms of an overall portfolio effect, how diversified is your portfolio? And are there companies that in certain scenarios actually will move together in the same direction, particularly in the downside? That can be tricky to do because, again, as we saw here with this DeepSeek case, it wasn't just the tech stocks that got impacted, but there were other sectors that there were certain expectations driven by anticipated growth in the tech sector that were also impacted. One that comes to mind is the energy sector and the number of energy companies that were impacted because of the anticipated higher usage of electricity. So those are the kinds of things, and they are difficult secondary, tertiary effects that have to be factored into any overarching investment strategy.
Towards the lesson for investors and investment strategy, I think that this does have a really interesting demonstration. Coming back to that point of the existence of DeepSeek did nothing to affect share values for any of the tech sector. It was that conversion on the Apple Store, the reaching the serial position, the number one position on the most downloaded free app list, that caused the panic and crash. And this supports something that we've seen before in multiple different cases, not just in tech, which is major swings and crashes are not driven by facts and fundamentals. Swings and asymmetries are driven by people and driven by reactions to people. And this is really a conundrum for most risk managers and most portfolio managers because they like dealing with, I say we like dealing with numbers. We like dealing with objective, rational facts. And this sort of emerging asymmetries that we see in market positions do not occur because of facts. And so I guess the best lesson there is, and yes, this is a self-serving lesson, develop as much of an understanding of behavioral economics and behavioral forces that drive financial decision making as you can, because those will create the truly problematic situations that will emerge.
Building on that point, John, what we're seeing with DeepSeek, we see in every industry, which is changing consumer preference.
Hmm.
And I would argue that one of the existential challenges for risk managers is being able to prepare for and appropriately react to changing consumer preferences. Some changes can be anticipated and planned for accordingly, and absolutely where a risk manager can do that, they should do that. That should be the low-hanging fruit. But the ones that could lead to a massive drop-off in revenue, or for example, in the banking industry, as we've talked about in the case of SVB, where there can be a run on the bank, these things are often involve events that are not so easy to see until you look back in hindsight. And why these events, from a behavioral standpoint, are so problematic gets back to groupthink. And I know, John, we've talked about it at some point. We are going to do maybe one, even two episodes devoted to groupthink. But what happens in these cases where there's a massive shift in consumer preference comes back to groupthink, and which is more pervasive today given how widespread social media is and how dependent human beings are on social media for their information. And as you alluded to earlier, the misinformation that is out there, or certainly the different stories are out there, make that even more problematic.
I think there's one final lesson here that is really just broadly about the AI space in general. I find it very interesting that when we look at OpenAI and Microsoft and Google, the industry leaders in the development of large language models and predictive modeling and forecasting, none of them saw DeepSeek coming. If we look at their response, if we look at the market position, all of them failed to accurately see the risk and threat and disruption presented by DeepSeek. There's a lack of predictive efficacy here in the AI models that they're using. Now, this could be for a number of reasons. This could be because the models themselves are insufficient in their capabilities, that they're just not complex enough. They haven't learned enough. They are not good enough at projecting and extrapolating trends. Or it could be that there are just large gaps in their data, coming back to our previous discussion about the Chinese market is notoriously opaque, and in the West, there's not really good visibility or insight into it. You could have the best AI engine in the world, but if you have a huge blind spot, that's going to be a very big problem in making meaningful conclusions about it. So, whatever the cause for this, I think it's an inescapable lesson that the predictive ability of AI here and now today is not as advanced as maybe we think it is. We've had a tendency to believe, and I say we, I mean the layperson, the average everyman looking at the emerging AI market. We have a tendency to see it as this miraculous, wonderful thing that is on the verge of essentially creating a theory of everything for the world around us. And this scenario, I think, teaches us that that's not quite true. AI still has a ways to go. No matter what the cause of this gap is, it's still not quite as developed as we think it is. This is maybe a bit of a mild heartbreaking thing for people who are advocates and enthusiasts of AI. This is maybe reassuring for people like Rich and I who exist in the knowledge capital domain and are probably most at risk for having our jobs displaced. Whatever the case, AI is not going to take our jobs in the next 5 years, Rich, I don't think.
I don't think so either. And in fact, I'm not sure for the foreseeable future because, as you alluded to, misinformation may be at a peak today. And it doesn't seem like given the current geopolitical landscape that we're in today, that it's going to change anytime soon. I think you're just going to see various versions of stories, and depending on what sourcing of information goes into your AI algorithm, there's going to very likely be some type of blind spot that won't get picked up and will lead to a lack of predictiveness of certain events in the future.
As we've mentioned repeatedly throughout this episode, this is still very much an emerging situation. We don't know where this is going to land. Nobody has any idea what the long-term consequences are going to be. And I'd say it's not unlikely that a year or 2 years from now, we'll do a follow-up episode or a sort of part 1B around DeepSeek and say, now with the full retrospect, with the full capacity of hindsight, what are the lessons, what genuinely occurred in this particular case. But until then, I would say that this is what we do know, and let's make every effort to keep our risk management and our intelligence as real as possible. Behavior and Risk is brought to you by Capita Solutions. Behavior and Risk staff includes our research team, Sherry Xu and Jin Zhang, and our editing team, Qingying Gao and Athena Liu. Theme music by Crypt of Insomnia. The opinions presented here are solely those of John Burkhart and Rich Loria and do not represent those of Columbia University, Capita Solutions, or any other organization. We thank you for taking a chance on us today.